Traders at UBA expect the market to remain calm as investors shift focus to today's 508.9 billion Naira Treasury bills auction while digesting the impact of Nigeria's monetary policy stance. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me now for more market movements. Chuka, thank you for joining us today. I'm just thinking, where do we start? Do we start with today's auction or do we start with the impact of the market reaction to the rate hike yesterday? Let's start with the auction today. What can you tell us, the subscription levels and rates?
Okay, the rate is not out. I mean, it's not out yet. I mean, the result is not out yet. But we don't expect any more surprises. The last result came out at 20.7, the same as the previous auction. Irrespective of the rate hike by monetary policy, we do not expect to see any much surprises at the fixed income market, especially as regard with today's auction. But
let's talk about that outcome from yesterday, 150 basis point hike. Was the market expecting a hike that high, at 150?
Well, the market was expecting a rate hike considering the inflation figures. And then, of course, the body language of the CBN governor as regard the price stability. And so we expect with the inflation figure printing at 33.7 that CBN will react. However, market wasn't expecting as much as 200 basis points. I personally was expecting between 100 and 150 basis points. I mean, as much as 150 basis points, I was actually expecting 50 or 100 basis points.
All right, let's walk us through trading action today at the different market segments, starting with the money market all the way to the treasury bills market.
Yeah, I'm glad I will start with the money market because the liquidity situation has been very tight. Over the past 3 weeks, we've seen the market in deficit of between 900 billion to 1.2 trillion. And that has also continued as regard, especially today. Market opened well over 400 billion deficit. It's currently around, hovering around over 700 billion deficit. It's currently around 720 billion. It will get worse, especially with the auction result expected today and then the settlement to be tomorrow. So, I mean, if let's assume that CBN just sold what is offered, then it means that over 500 billion will leave the market tomorrow. That will, will add more pressure to the liquidity situation we have. Yesterday, FAC came in, about 1.2 trillion was disbursed among the three arms of the government. But then, still market is still in repo. That shows you the level of tightness we have in the market. And that will affect trading, especially as regard the fixed income market, because that will alleviate yield. We might even see some banks or some traders trading cutting the losses in order to be able to meet their liquidity obligations. And so on the bond market, for example, we've seen the yield hover around 17–18% levels, especially on the longer end of the curve. Then, of course, the T-bills result were still expected, and then the outcome will chart a course for what the T-bill rate will be going into the rest of the week.
I just wanted to get your thoughts. So thank you for that. Wanted to get your thoughts on this strategy of the CBN. You and I have had several conversations on this move, which is meant to be a short-term strategy to get more inflows into the market to help strengthen the Naira. But with rates at between 18–20%, you and I have talked about how sustainability, how much the CBN can stand behind this and to get those inflows in. Is it worth the trade-off at the moment? What are your thoughts in terms of how this is working out?
It's working out well. If you see the month-on-month inflation figure, you notice that there's a decline. However, the core inflation indices moved up by about 50 basis points. But then, how long will this last? It's, for me, I don't think it's sustainable as regard the high yield we have in the fixed income market. But again, of course, if CBN is looking to maintain price stability, then I think this is the way to go. Considering the fact that we're beginning to see results between January and April, we saw well over $15 billion came into the market through some of these policies by CBN. So it's quite encouraging, and that has actually reduced the supply pressure on the FX market. And so I believe that as long as CBN is continuing to gain end results, they will continue with this aggressive tightening, as long as it keeps giving them the results that is expected.
Well, speaking about the FX market, any impact there, and where did the Naira close today against the US dollar?
Naira is currently trading around 1,465, appreciation from the previous day. Of course, like I said earlier, it's all about demand and supply. And then, of course, the CBN governor alluded to it yesterday, when he made mention of the fact that what you see in the FS market is about demand and supply. Free market economy, free price market, you expect to see movement of demand and supply, and of course movement of rate, and that's what we expect. So I think that on the long run we will better off for it, but on the short end now we continue to see this fluctuation, within 1,003 to 1,450,
right.
1,005.
We have about 1 minute left. I want you to just get your thoughts on some comments made by the Debt Management Office DG a few days ago, when she was talking about how the federal government, the DMO, on behalf of the federal government, has been able to raise about, correct me if I'm wrong, I believe it was about 4.9 trillion or so out of the 7 trillion or 6 trillion budget deficit for 2024, and also around 4 trillion also for the securitization of the ways and means, all raised from this market. And she talked about how the market was deep enough or sophisticated enough, to withstand these large borrowings, new borrowings on the part of the federal government. Just your thoughts on that?
Yeah, if you watch between January and March, especially the early stage of February, you will notice that all the auctions I think one of the auctions actually was around 2.5 trillion, indicating that the government was looking to borrow heavily in the fixed income market, especially with the fact that we haven't seen much inflows coming through the FPI and all that. And so I am not surprised that they've been able to raise that amount of money. But then, it also shows you that the later auctions, especially with the last 1 week, one month, we've seen that they've been able to reduce the amount on offer. If also there haven't been much oversold as regard the subscriptions and all that. So that is an indication that they are actually getting to the level they want to get to. And for me, before the end of the second quarter, we see a yield decline, especially if nothing, if the market does not react to the MPR increase of yesterday, right, which I don't think it will react. So we start seeing a gradual decline in yield.
Right. Thank you so much, Chuka. We'll leave it there. Thank you for bringing us up to speed on market trading today. Appreciate your time. Chuka Nwachukwu, Head of ALM and Balance Sheet Management at UBA.